Mortgage process getting overhauled. Foreclosures outpace bank. Help Main Street, not Wall Street. Help Main Street, not Wall Street.
Next on Real Estate News You Can Use. Welcome to Real Estate News You Can Use. What's going on, Keith?
Hello, sir. How are you?
I'm Ruben Austria.
I'm Keith Carberry.
Keith Carberry. Real Estate News You Can Use.
I'm Keith Carberry, being Keith Carberry today. And you're not.
Sometimes I wish you were not Keith Carberry.
Oh, snap. What do you wish, Ruben? What is your wish? Your wish is my command, big boy.
No.
Not.
If this is the first time on the podcast, this is a podcast about real estate and mortgage, about the industry, about what's going on in the wonderful world of real property.
Yeah.
So we actually talk about 3 articles every episode, discuss them, provide our own commentary, and let you decide for yourself.
We do all that and more.
We put the articles on renewsyoucanuse.com, so check it out. And
I like the new feature that we have, Ruben, that we added today.
That's right. That's right. I forgot to mention.
You know, almost every single day we add a new feature on renewsyoucanuse.com, and this is the one that I like. Is we're going to be asking questions, so we're going to be a little bit interactive. And what's our question this week?
Question of the week is: would you buy a short sale or foreclosed home?
Yeah,
there's so many of them out there.
Check it out and please answer the question. If you don't, you'll be sorry. All right, dude.
All right, so we got big news this week, right?
The Fed is proposing to overhaul the mortgage process, and it's high time that they do that. You know, as you know, I dabbled for a short period of time as a loan officer, and I know that you're a loan officer.
Own a mortgage company.
Own a mortgage company.
Not doing any more loans, but
yeah. Right. But yeah, I mean, really, it's about time that they do make these changes, because now you can compare apples to apples. And if you don't know what we're talking about, if you were to call up a loan officer and you were to call up 2 different banks and ask them what their fees are, they might give you a verbal number over the phone, or they might even fax something to you if you ask that to be faxed to you. But everything that's faxed to you by those 3 different entities are going to be completely different from each other. And what they're trying to do is they're trying to make some similarities so that you can compare apples to apples.
Right. Well, I mean, you know, during the all the time that I spent in the mortgage business, I've always believed that they need to do things like this.
Oh, without a doubt, Ruben, it drives me crazy.
But at the same time, yes, it does. It drives you crazy that you think. I mean, it always seems to be the case, Keith. I mean, it's just, you know, not prevention,
right?
But just, you know, repairing the, you know, problems when they occur.
Well, I think the biggest thing, Ruben, that I always noticed that in the business and as a real estate agent, when some people say, "Oh, somebody's doing a no closing cost program," well, a lot of people don't consider the bank attorney's fee as part of the closing costs. So, for instance, some companies out there will do no closing cost, and at the end of the day, you see that there's a $650 fee for the bank's closing attorney.
Yeah, I mean, the 3 major things that the Fed wants to do is make it easier to compare mortgage offers, like you said, Keith, when shopping. Force lenders to estimate closing costs more accurately, and ensure that borrowers know the terms of their loans. I mean, these are 3 things that were supposed to be done, but now they said they're going to do more.
I think one of them is actually, in my opinion, a little bit humorous. They're going to make the person read what type of a loan they're getting so that they understand it. Please read this out loud so I know that you're doing it. What, are they going to record the reading? Yes, Your Honor. She read it. She understood it.
You know what? It seems ridiculous.
I know.
But you know what? I'm not opposed to these things.
I'm not opposed to it
because you
either.
know what? I mean, the company that I have, we're ethical and we like to do things right. This is only going to help those companies like mine. But at the same time, it's going to make it harder for crooks to do what they do.
Right.
You know. But,
yep. I agree.
You know, so. That was from bankrate.com. If you want to check out the article for yourself, renewsyoucanuse.com.
.com.
Foreclosure rates.
You get loud paper.
I do.
Yeah.
You like that?
crinkly.
Foreclosure rates outpace bank sales.
Eek!
Obviously, this
Eek!
this is obvious, right? I mean,
right.
But we like articles because they provide us with numbers.
Right.
Okay, so
But let's just go over it again, though. What they're saying is that the foreclosure rate is outpacing the bank sales rate. So the inventory of the banks
it's growing.
Is growing. That's
fast.
Quickly growing, doubling in some cases.
Right. Well, it says last year sales of foreclosed homes rose just 4.4%, while the supply more than doubled. So
Right.
I mean, what are you gonna do?
Yeah.
As the end of last year, only 2%, about 2% of all home loans were in foreclosure, and it's it's tough.
Yeah, 2% of all homes are in foreclosures. That's a lot. That's a lot.
That's a lot of homes.
There are a lot of homes out there, so that's why. Yeah, and it's anticipated. Let's see. This is an interesting number because a lot of people only read one part of this number, Ruben,
Right.
and they don't read the whole sentence. And it says it's predicted that about 3.3 million home mortgage defaults in 2007 and 2008 will occur, and he expects that 2/3 of those homeowners will lose their homes. So everyone's saying, there's going to be 3.3 million foreclosures over the next over the 2007, 2008, but only 2/3 of those people are going to actually lose their house.
Right.
I mean, that's a large number, but if you look at 3.3, that's not the real number that people are going to lose their homes. It's probably more around 2.5.
That's still a huge number.
It is a huge number.
Regardless,
I know.
for the full article, go to renewsyoucanuse.com. Create your own opinion. Don't listen to Keith. Well, listen to Keith, but you don't have to listen to Keith.
Don't listen to all of me. My wife has to listen to all of me.
What was that chant again? What was that chant?
Oh. Well, Main Street, not Wall Street. Main Street, not Wall Street.
What
Great article.
Keith's talking about is that there were actually demonstrators outside of Bear Stearns' office in New York.
And Bear Stearns is on Wall Street.
And
the average Joe Schmo lives on Main Street.
Main Street, right.
So that's what they're trying to say. So go ahead.
Right. So they're basically what protesters are angry about is that the government is helping bail out this free market company and not helping out homeowners, which is, I can't say that's not the truth.
Right.
I mean, the government's doing a ton.
The government's doing a ton of work, and they're bailing out both people. Did they bail out Bear Stearns quite significantly? Yes, they did. Should they have? Yes, they should have. Was it something that they didn't want? Did not want to do. They didn't want to do it, but they had to.
Oh yeah, I mean,
but it's kind of gimmicky. It's kind of funny, and there is truth to. I mean, I do understand what they're trying to get to, but
right. I mean, in this article, someone at Bear Stearns was actually.
I like your pink highlighter. That's nice.
Why you gotta sell me out like that? It says someone at Bear Stearns yelled out to a homeowner, "That's more than $1 trillion in mortgage debt."
That's right.
You're crazy. So that means, well,
no, you're crazy.
Check out the full article at renewsyoucanuse.com. You know what I'm talking about. But I mean, Bear Stearns owns almost $1 trillion of. Is that what?
Yeah, it's a huge number.
They own a huge number of mortgages.
Right.
So for them to go out of business,
because they're bailing them out, they are helping out. In essence, they are helping out the
a lot of people don't understand what's going on.
Yeah, I think, but it was a little gimmicky. I think it's kind of cute and funny and sad in the same sense. But yeah, check it out on renewsyoucanuse.com. I think that it's funny how the stock market has a direct relationship to the real estate market.
Right. It
Right?
is.
Yeah.
So. But definitely, like as Keith had mentioned earlier,
I said something?
You did. You said something
profound,
important. We're gonna have a poll every month. So if you're watching this and you really want to participate, we really want to know how you feel about foreclosed homes and short sales.
I love polls.
You do?
Pole dancing, stuff like that.
POLL. POLL.
Oh, not POLE. The North Pole. Bye.
Make it a great day.